Good morning, traders. It is Sunday morning, about 6 a.m. Central Time on January 28th. Time for our weekly video. As we do in all of the videos, we're going to start off with my previous pick. We're going to review it. Then we're going to do some market analysis. Lots of educational content today. And then we're going to use the systematic approach that I teach to find some new opportunities. JPM. I hope all of you have been able to attend the live events that we do on Wednesdays. If not, at very least, watch that recording. There's so many different topics and questions that come up from all of you that you're bound to share some of those same questions with other folks. So try and watch for those on Wednesdays. JPM was the stock that I highlighted. I wanted to stay out of the tech sector. I've had 3 or 4 picks. Meta, IBM, both have done fantastically recently. ADM, those tech stocks are starting to get a little bit tired, and this week we've got mega cap tech earnings. So I didn't want to highlight anything from that sector. I wanted to give you something different to look at, and I wanted to give you a stock that's already announced earnings. And that's one of the tricky things this week is we're going to be right into the thick of earnings season. We don't hold anything over the earnings announcement. There's no reason for us to. That's a binary event. Why would I want to go into a trade with a 50-50 probability when I can do exactly what I show you week in and week out and do much better than that? So JPM had announced earnings here. You can see how the stock rallied up to a new high. It opened there and it sold off the entire day. Had a little bit of follow through selling. Perfectly natural for a stock that has made that kind of run. What I've also been mentioning about financials is that we also have relatively boring business models. What does that mean? Well, that means that they make money consistently and you don't typically see big monster moves like this. Well, they have the wind at their back. Interest rates probably going to be higher for longer. We've got strong economic growth. That's also good because people have jobs and there is less credit risk. So I like the bank stocks. And 2 weeks ago, before the earnings even came out, I said, I think these stocks are going to tread water. They've run hard, they've run far. Look for a tiny little pullback, and then buyers are going to come back in and they'll lend support to those stocks, and then they have a chance to make another leg higher. So I really still like financials. I think that they're in a sweet spot right now. So JPM, I like it. I think it continues to power higher. We have to be careful with the FOMC this week. I think it's going to be favorable for banks, and I'll get into that in just a little bit. HD, I liked that last Sunday, so let's review it. I posted on Twitter, which please, in the link in the description of this video, I have a link to my Twitter feed. That's where I can actually put out some statements and give some follow-up on the trades when needed. Well, Sunday evening, I realized that Home Depot had been downgraded by a brokerage firm. Well, we were looking to sell it out of the money bullish put spread on it, and now we're getting the pullback in the stock. I don't know that we're going to get one in time. February 20th is the earnings announcement. I'd like to be able to sell something down here around the 335, 330 bullish put spread. Try and get $1 for that, but we need that to happen very quickly because time is running out. We've only got 3 weeks or so until the earnings announcement. So I still like Home Depot, and this pullback provided us with a decent entry point, but I think we might get another little pullback in the market this week. So let's shift our focus. Let's take a look. Let's actually, before we do that, let's take a look at SMH as one of the ETFs for semiconductors. And you can see it's made a really good run. And this is a beautiful breakout here. You can also see that we're starting to see a little bit of selling pressure in there. So after a big run, we should expect that. So technology stocks, I still like them, but I think that this is the week where we want to sit back and see how those earnings are received. Take a look at the market. This is the SPY. SPY has been grinding, grinding, grinding higher. This move here told me to expect a small dip to start the year and then to have nice follow through to that rally. This is a little bit of profit taking, normal profit taking. We get 4 days of weakness to start the year, and one candle erases all of that. And you can see how the S&P 500 is above a VWAP-Q. So now we get this nice breakout to a new all-time high, and we have some follow through. What is the problem that I see right now? Well, tiny bodied compressed candles. This is not a high quality rally. Yes, we are floating higher, and we have floated higher previously, but as soon as you make a new high, this should look familiar to you. Look, hey, there's a long green candle and a breakout. There's a long green candle and a breakout. And then we get these tiny little bodied candles. This is floating higher, but it in essence is a compression. And we're getting the same thing right here. So we expected this. We've been trading this. That's why we've been favoring the long side. Why? Well, I'd already explained the price action was telling us that we're going to go higher. The second thing is that if you look at the event calendar, this is a really busy week. We've got mega cap tech earnings, Google, Microsoft, Apple, Amazon, Meta, they're all on deck. Some of them may announce this week, they may not, but this is like the pinnacle of earnings season this week. We also have the FOMC statement on Wednesday. Okay, well, what can we expect there? The Fed's been very vocal. They've said that they want to pause and that they're considering some rate cuts this year. Well, this Wednesday, I believe they're going to give the market a cold splash of water. What does that mean? It means that everybody's looking for a Q1 rate cut, and I don't think it's in the cards. The reason for it is because the Fed has been very vocal about saying, listen, we got inflation completely wrong 2 years ago. We are not going to make that mistake again. And they have been hawkish, and they have been firm on that stance. Fastest rate hike in decades took place. The market's been able to shoulder all of those interest rate increases. We just got the advanced look at Q4 GDP this last week, 3.3% economic growth. Expectations were somewhere around 2.1, 2.2% growth. That is a much stronger than expected number. We also had a very favorable PCE deflator that came out on Friday. So inflation is also looking pretty good. So the Fed has the best of both worlds right now. They've got inflation coming in. We've got stronger than expected economic growth. The initial jobless claims numbers have been excellent. So I'm expecting a really good, solid jobs report on Friday. This is all good news. The ISM numbers, the PMI numbers, they've all come in really well. So the economy is clipping along. That's the environment that I want to be in. That's the environment that I want to stay in. I am not one of these, oh, gee, the economy was too strong, and that means the Fed's not going to ease for quite a while, and that's bearish for the market. That's not the camp that I'm in. I'm in the camp of we want this economy to grow strong. We want people to have jobs. We want inflation to come in. All of those things are good for consumer spending. They're good for credit, and they're good for corporate profits. So don't buy into it. Any little rally that we get on a super weak economic number is going to be very temporary. And conversely, if we get a market dip after a strong economic release, I believe that is going to be temporary because it's good news. There have been so many market rallies. Some of the biggest ones that we've ever seen have been in a high interest rate environment or a rising interest rate environment. 5% interest rates seem super, super high given where we've come from, but 0% interest rates, we had never seen that before. And anything coming off of those levels after being there for years is going to seem like interest rates are extremely high. Folks, this is a normal level for interest rates, historically normal level. The Fed doesn't have to do anything right now. Everything's chugging along. They've also got plenty of breathing room so that if they see any kind of hiccups in the economy, well, they've got an arsenal now. They can lower interest rates. 2 years ago, they were painted into a corner. Their war chest was empty. So they like being there, and they've been very vocal about, hey, don't expect any rate cuts anytime soon. Expect higher for longer. Okay, so this week, Wednesday, I believe we're going to get tech earnings that are excellent, but these stocks have run up an awful lot. So let's take a look at QQQ. And you can see how QQQ has been powering much higher. There's room for some profit taking in here. Am I looking for QQQ to roll over and play dead? Absolutely not. I am as bullish as I can be. Chest pounding bullish, okay? But the market is going to make 2 steps forward, 1 step backward. 2 steps forward, 1 step backward. That's what the market does. So what we want to do is we want to throttle our bullish plays based on that type of cyclical price movement. So as the market surges higher, as it's done right here, we want to ride that wave. And then as we start to see these compressed tiny body candles, we want to start taking some risk off. We want to start taking some profits. And then what? Then we're going to wait for the next little dip, just like this one. And when the market comes in and we start to see some support, that is when we reload on our longs. So that whole 2 steps forward, 1 step backward, 2 steps forward, 1 step backwards, 2 steps forward. Okay, take profits. Now you want to wait. I think we're going to see tech stocks I should say have a mixed reaction. I think the results are overall going to be very good, but we're going to see some of them move higher, some of them move lower. The net on all of it is that the market is going to struggle to advance until it has time to digest those gains. And I'm not looking for a long pause here. I'm expecting maybe a week. That's it. A couple of bearish days in there. Nothing dramatic. No organized long red candle, long red candle, long red candle. This AVWAP-Q is your guide, and it coincides with what was horizontal resistance is now support. So right at the open of that Jan 19th candle is 477.65. That's a nice support level. I would be leaning on that, and I would not expect to see the market pull back and take that level out given the backdrop right now. If the market rolls over and knocks out that AVWAP-Q, then we've got to be a little bit more cautious, okay? We're not expecting that to happen right now because the strength has been there for us. If it does happen, and it happens very quickly, I still would not be shorting here. Then you still have to wait for a double top lower high, and then you can consider some shorts. I don't think we're going to see a shorting opportunity for a couple of months right now. And the reason for that is that the market has been so strong. It has been relentless. There are no dips. Why aren't there any dips? There aren't any dips because buyers are looking to get in on every one of them. And that's what gives you that nice orderly price action higher, is that every time that bid is tested, there are buyers there, and they have to get more and more aggressive, and they keep raising their bids, and then the market makes a new high. That's how these things work. Okay, if we had had a chart where we rally up and pull back hard and rally up and pull back hard and rally up and pull back hard, then my opinion would be much different, because that is a choppy upward trend that doesn't have a lot of strength. That's not what we're seeing here. This is a beautiful rally, and we are at an all-time high. So if you are a short, you are as bearish as you could possibly be. Are you going to be active in the last week? No. We're at a new all-time high. Why would you be a short seller at a new all-time high? Why would you be a short seller ahead of a major event like the FOMC meeting? You wouldn't be. Why would you be a short into mega cap tech earnings when those are the stocks that have been fueling the market rally? You wouldn't be. You'd at least let those companies announce earnings and then let some of that air out of the balloon. Then you have a chance on the short side. And that's why the market has been floating higher on very light volume. And we're seeing these compressed, tiny bodied candles, is because there is no offer. There are no shorts out there wanting to short right now. So on very little volume, the market can continue to drift higher. That's what's happening currently. So yes, we get the news from the mega cap tech stocks, we get a cold splash of water from the Fed, and then we get this little pullback that we're looking for. Wait for the market to establish support, reload on our longs. And so here's a mistake that a lot of traders make, is they'll come in and they'll look at the events coming up and they'll think, well, I'm just going to take profits on my longs and then I'm going to get short and I'm going to try some shorts in here. And so what happens is they start taking some short positions and they start building some overnight shorts, and hey, the market's really, it's doing what I thought it was going to do. And then all of a sudden, out of nowhere, the buyers return and the dip is over. And you get this gigantic long green candle. And they are scrambling to exit those shorts. They've got to buy them back in. So that fuels the next move higher. And they're focused on mitigating losses in their positions because they got cute and tried to time this little dip and get short. I've been there. I've done it. I'm trying to help you avoid that mistake. And that's exactly what we saw right here. So if you came into the year thinking that this is a big rally and the market can't possibly hold all of those gains, I'm bearish. Oh, there's a bearish move. Look, this is the time to get short. If that was you right here, you took some heavy losses, and you should remember that lesson. Don't get cute. Follow the trend. So as you get the market floating higher, compressed tiny bodied candles, this is where you are taking your profits on your bullish positions. You're going to wait for that dip. Hey, look at this. We've got a bullish trend day coming, and we're back through the AV WAP-Q. Right here, you are reloading on your longs. We test AV WAP-Q briefly here. Off to the races. So I'm telling you right now, January 28th, the hour is late for your longs. Take some profits. If you've got a swing trade on that you plan on holding for 2 or 3 months, fine. No need to do anything if you're willing to ride out a little bit of a pullback in here. But if you're long back in here with a 3 or 4 month horizon, you don't care about this. You don't care about this. You're just long, okay? So your duration determines how sensitive you need to be to these market pullbacks. But by all means, do not try to short this. If you're day trading shorts, okay, just know that you should trade smaller size because you're trading against the market trend, and you have to have good entries because you cannot afford to get on the wrong side of the trade and then have an overnight position that you're holding. Yeah, I meant it to be a day trade, but it didn't work out so well. But I still like the stock short on a longer term basis, so I'm going to hang on to it. And then you come in the next morning and the S&P 500 is up 25 points and your stock is gapping $2 or $3 higher, and now you're left taking a big loss because you got cute and you did not trade well from the short side in a big bullish trend higher. I see this all the time. So don't get cute. Your mentality is, I'm in long only mode. The market is telling me to be in long only mode. I get this pullback, I can start selling some out of the money bullish put spreads, or I can simply just wait to reload on my longs as soon as the market finds support. Where do I think the market might find support? I've already outlined that. This would be a kind of line in the sand where I'd want the open of this key bar preserved. But even if the top of it is tested, I'm not going to be jumping up and down thinking this is a great big pullback and a fantastic entry. So I won't really know until I see the depth and duration of the next dip how much more upside the market could have. And this is a really important concept. The depth and duration of these dips tell us where the market is going and how much fuel it has. This little dip at the beginning of the year, if it would have continued to fall, now we've got a long dip in here that's going to last a very long time, then I would not expect this kind of bullish price action on the back end. It's going to take a long time to recover from that, and that magnitude of the dip tells me there are sellers and that the bid is not that strong. So when we see dips, we want them to be brief, 6 to 8 bars, really no more than that, and we want them to be shallow. So on the chart, you look at what would represent brief and shallow. Where might I see that support? If the pullback starts to gain momentum and what I thought would be shallow is breached, oh, okay, you know what? This has been a great rally. Now I'm finally starting to see some heavier signs of profit taking. This is also very important because right now the market is at an all-time high, and I'm hearing lots of people say, how do I know where to set my targets? The market's at an all-time high. There isn't any kind of resistance up here. Price action. You follow the price action. When the market continues to go higher, you stay long. When it starts to compress and move horizontally like this after a big run, that is a sign of resistance. Wham, 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 wham. We like this price. We're willing to take some profits up here. That's what the candles are telling you. So as long as this type of rally continues to unfold, we're in long-only mode. Sell into strength. Wait for those compressed candles. Wait for a long red bearish engulfing candle. Okay, hey, that's a warning sign. I should take profits here. So you exit, gauge the depth and the duration of the next dip. If it's brief and shallow, we're gonna continue to go higher. You reload on your longs. If it's something more than that and it starts to look pretty daunting, okay, warning sign that the market is starting to top out here. So again, I don't see this happening for a couple of months or so, just based on this price action right here. And what will happen as the rally starts to wane is this is the first bullish flag. Yeah, second one, not really. It's only had 3 days to form, but you're going to get a third one up in here. And this could be actually the second one that we see this week, and then one more probably early March or so. And then when the market starts to kind of top out and it really can't advance anymore after 3 of those bullish flags, then you're going to start to see prices flatten out. Market's digesting all of those gains and it's waiting. It's going to need time before it can advance. Those valuations have to catch up. And along the way, everyone's going to be evaluating earnings and the economic strength. So that's what we should look for. You know that all of these videos, I do a lot of market analysis, and there was kind of a classic setup that we saw on Friday, and I want to talk a little bit about that. And I'll try and write an article on this as well. So it really helps to kind of understand what institutions are thinking, and you don't have to understand it completely. All you have to really do is to reflect on how you are feeling when you trade. And then that kind of puts you in the mindset of where other traders probably are. So you come in, get this nice gap up Wednesday. We don't chase gaps, okay? Chasing gaps, no bueno. Big chance for a big reversal. So you wait for support to be established. And as the day unfolds, you can see we take out the high, and there were some signs. This was a resistance level. Again, this is an all-time high now. So you get this wimpy kind of move at the high with a long red candle. Okay, that's a warning sign. This is kind of a double top formation with a long red candle, and we can see that the rally has not been that strong because we have lots of retracement. The first thing we did during the day was to retrace, okay? And then we poke and make a new high, and we have a big retracement. Lots of mixed overlapping candles. This is not a strong move higher by any means. And then we sell off. Okay, we even almost fill the gap. So at the end of the day, Wednesday, you're thinking, okay, well, we closed higher, but that wasn't great. And we did have some pretty decent volume on that decline. So I'm mindful of it. So the next day, we gap up. Okay, we know to be careful now. So we get, again, mixed overlapping candles, some nice long red candles in here, and a double top lower high. Okay, well, now we get our wave of selling. So now after 2 days, I'm thinking, the market just has not been able to get its sea legs here. I'm starting to see a little bit of profit taking in here. The price action is a little choppy. We had some economic news. We had the durable goods orders. We've had lots of earnings releases coming out, and the reaction has not been overwhelmingly bullish. But Friday, we come in, and we start looking like we get this same pattern in here. All right, well, we're not going anywhere. Ooh, wait a minute. There's a nice candle. We've had a reprieve for a couple of days. Maybe this is going to be the day that we break out. Yeah. Got mega cap earnings coming up next week. That should be really bullish. And we've got the end of the week. We tend to see some decent moves on Fridays, and the PCE deflator, it came in and it was lower than expected. That's good for inflation. Yeah. This could be the day. This is going to be the day that we break out and we run. So you get this sloppy open in here with mixed overlapping candles, some red in here. We do the bid check, and then all of a sudden we get a long green candle. Whoa, that was nice. Right away you should be going, did it take place on volume? Nah, the volume was light. Okay, so, whoa, another stacked green candle. How about that? Whoa, and another one. Look, we're through the high of the day. Oh my gosh, look, we just made a new all-time high. We took out the high from Wednesday. This is it. We are going to rally into the weekend. So, you've got lots of bullish speculators piling in right here because you've been patient all morning long. You waited almost an hour for something. Give me some signs of life. And so you've got all your bullish stocks lined up. This one looks good. This one looks good. This one looks good. Hey, now I got the market with me. Look at these stacked long green candles. When you see this, your first instinct should be to go, where did we come from? Is this move consistent with this crap? Is it consistent with with this crap. No, it's not at all. Why all of a sudden, after an hour, after all of these economic releases have been out, why right now is this the time to buy? Why do you think asset managers are out there piling into stocks all of a sudden, just after an hour? Well, they aren't. And that's why I'd mentioned in the chat room, you've got to be very careful. This looks nice and you got the stacked candles, but you can see there are wicks and there are tails. So we are retracing into the previous candles. What changed? My first instinct is not gonna believe it. Not gonna trust it. Why? Because this is crappy price action. And the market, if it really wanted to move higher on those economic releases, it would have done that Thursday, it would have done that Friday, boom, 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 take out that high, never look back. You would have seen this right out of the gate. But all of this choppy price action tells you to be very careful. You can see that on Wednesday, we tested this resistance level right in here, and then we've got another test of it right here, almost a test of it here, almost a test of it here. So you can see that in this range right here, there are a decent number of shorts. Okay, not a lot because we're at a new all-time high, okay, but there is resistance at least. There's some profit taking. It doesn't have to be short sellers. It could simply be profit takers. And so now you've got the programs that know that if anybody is short here, they can shake out some of those shorts and see what's up there. Are those offers still up there? So they poke through it, and this is when the retail trader gets super excited. As I mentioned earlier, you don't have to know what the institutions are thinking, just do some self-reflecting and know what you're thinking. And if in here you are gaga, gotta have it, been waiting all day for this, you're going to be in here buying and you're going to load up on the stocks that looked good. If you picked well, you could weather this little storm here. But this was a sign. The way that we backed off of that high told me that this is just a head fake breakout and that we're going to go lower. Well, how is that important to me? That sets the tone for the entire day. So you get sucked in here. There are probably a few short stops that got triggered, some buy stops, but you can see the immediate selling pressure in here. And what it does is that when you buy your stocks up in here, you're bag holding the rest of the day because this was just a little head fake breakout in what is going to be a sideways, dull trading day. So if you're day trading, these are the things you need to watch for. It's just a head fake breakout. And the sign was not here. The sign was not here. The sign was not here. The sign was here. The sign was here. The price action ahead of the move is what tells you what to expect from it. So yes, we pull back. We have some stacked red candles. And you know what this is right in here? That's from the traders that bought this breakout. Now they're like, oh, crap, I got to get out. And so they start bailing out of positions because they're taking decent size losses on those positions. Market finds support and closes on a VWAP. So those are some things that you really need to be mindful of when you're trading. I know that when you're starting out, everything seems random. You are just constantly out of sync with the market. Every time it looks like we're going to break out and rally, this looks so good. We're breaking out to a new high, and then the bottom falls out. If you start to understand how all of the pieces fit together, you get clarity. And until then, everything seems random. So that's my job. I'm trying to help you make sense of all this. So this week, let's recap what our thinking is. Tiny bodied candles starting to compress. Major news ahead this week. Market has been pricing in a very dovish Fed, but the Fed has not been dovish. The Fed has been hawkish. They have no reason to be dovish right now. They are in a perfect spot. They'll wait as long as they can, and I believe the comments on Wednesday won't be as good as what the market wants. Are they going to be bearish comments? No, they're just going to say, listen, we just don't see the need to cut rates in Q1. We're thinking maybe May, maybe June. We've got time. We want to evaluate inflation. We want to make sure that everything is still on track. And the market's not going to like that. And we'll see a little bit of profit taking. And plus, you've got tech earnings coming out. So there's a little air that's going to get let out of that balloon. As soon as we get that pullback should be brief and shallow. Then we're going to have an opportunity to reload. Maybe that is 10 days from now. Won't know. Got to watch the dip. And that dip is also going to provide us with very valuable information on where we go once that dip plays out. So let's take a look at some stocks. I'm just going to go through a couple of searches, and I'm going to go into my bullish search, and I'm going to go into green royal flush. Again, the trick this week is finding companies that have announced earnings or that will be announcing earnings a month from now, because we'd like to have some staying power in the stock, and we don't want to be in a position where, oh, I'm in this stock, it looks great, but they're announcing earnings in 2 or 3 days. And so we know we're going to be out of that position because that earnings timeline is bumping up against our position. So we're going to have to exit. We're kind of painted into a corner. We don't really have a chance to let the stock run. Plus, stocks tend to get pretty choppy right into the earnings release. So why get into a random kind of phase like that? Let's avoid those. That should be your thinking. So, excuse me, as I look through the list, there were a couple of stocks that caught my attention. I'm just going through green royal flush. It's such a great search. I'll take a look at a couple of others as well. But you can see how AXP, big earnings announcement, nice big breakout, long candle closing on its high. Really nice stuff. Zoom out a little bit. We've already mentioned that people have jobs. The economy is strong. That's good for AXP. That means that their credit card write-downs will be pretty small. But the problem with AXP, and you can see it's through this horizontal resistance, is that we had another earnings announcement. And that was in Visa. Now, Visa's made a big run relative to AXP, but you can see how it's starting to pull back a little bit here, and that was after the earnings announcement. So, got a little bit of mixed bag results. I like AXP. I think AXP on this gap up, I'd like to see it come back and preserve half of that long green candle. We know that we're going to, well, we don't know. I suspect that we're going to see a little profit taking after the FOMC statement that lasts maybe a few days or maybe even a week. I would like to see how AXP holds this long green candle. And I'd like to see it hold the halfway point, which would put it at roughly, let's say, 197 or so. If it can do that during market weakness, it tells me this breakout is legitimate, and then it will creep higher. And I could sell a bullish put spread here, depending on how far back it comes in. This 190 level would also be, that would be really nice. If I could sell a 190, 187 bullish put spread, 190, 187, 50, I should clarify. If I can do that for a credit of 50 cents, I'm in. If I get the market pullback, if the pullback is brief and shallow, if the stock holds the halfway point of this long green candle. Contingent, 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 contingent. That is my game plan. I don't need 1 or 2 of those pieces. I need them all. And that's what it means to pick the best and to really have a game plan for every single trade that you do. You know what your game plan is, you know what your expectations are. Those forecasts and opinions are well founded. And then when they start to play out, you know exactly what you're going to do. And if anything changes, the stock pulls back more than I thought it would, the market pulls back more than I thought it would, we reevaluate. Okay, we have new information that we need to process. That's how trading works. It's not rigid, it's not mechanical, it's fluid. So, yes, if AXP did that, I would like it. I would think that that is a decent formation. I really like Netflix. Now, Netflix had an earnings announcement and they're expected to raise their prices. It's kind of out on an island. What I mean by that is there aren't a lot of companies like Netflix. Sure, there are other media companies, but nothing quite like Netflix. I love this breakout. I love this follow through. So not only do you get the big breakout, you get follow through. Same thing here. If Netflix can hold that gap, which is right around that 540 level, with any kind of little market retracement, I would be gaga for selling some out of the money bullish put spreads on this stock, and I might even consider just buying some longer dated call options because I love what the stock did after the earnings announcement, and I'm still bullish on the market longer term. The stock looks really good to me. So Netflix is going to be your pick. No, I do not like coming in and buying this out of the gate Monday. Okay? If I felt like you could all be so nimble that I could show you a couple of shorts that are setting up, I would do that. But then I'm going to have to review them. And it'd been like, well, you know, you had this one day or these 2 days to day trade this stock from the short side. But you had to be nimble because if you didn't take your profits, you're going to have your head handed to you when the buyers returned and the market powered higher. So we're just patiently waiting for this pullback this week. I would not be out there adding to long positions Monday, Tuesday. The one thing that we needed to see, and I thought we might see, was some decent strength last week in the market. Wednesday, Thursday, Friday, I expected to be better, not this choppy back and forth type of price action like this. This is a compression. If on Friday we were able to take out the high of the week and the price action had been more float, 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 grind, grind, grind higher, then I feel that Monday and Tuesday had the potential to be good because shorts would be very, very passive and the momentum would be set. As I look at it right now, I think Monday and Tuesday and Wednesday are going to be pretty dead days. So any remaining strength that we have into those mega cap tech earnings, we'll probably see Monday, and then Tuesday and Wednesday are going to be dead. So taking gains on your long positions and looking for really nice exit points, that should be your focus Monday and Tuesday. By Wednesday, you're in wait and see mode. And it still means that you're lining up your stocks that you'd really like to buy. What would I do on Netflix? What could I possibly do on Netflix that will help me prepare for the type of price action that I'm looking for? Well, Pete's already said he's looking for a pullback in the market. He's saying stay long, buy dips. If only there were a method to help me do that. So you go through your lists and you find the dozen stocks that you really, really like. And then you right click and you think, well, if the market pulls back for a few days, what might Netflix do? Well, it could soften up a little bit short term and then it'll rally. Well, fantastic. Right click, create alert, just like I do in all my videos. And how about we go with LRSI? So LRSI, I want to see it to be greater than 80. Actually, you know what? I'm going to revise this to greater than 20 because I want to see it go bearish, and I'm going to select an M30 basis. That's a 30-minute chart. Okay, so now I'll explain this part of it. First of all, LRSI is going to be close to 1 right now because the stock is continuing to power higher. And I'll put the indicator up. I just know that's where it's going to be. It's going to be there on a 30-minute basis as well. I'm using a 30-minute timeline for this because I don't feel that the stock is going to pull back very hard or very far. And that's why I want a more sensitive, shorter time frame to do that with. Okay, so I'm going to save that alert, and then we're going to put up LRSI. So we'll go into our studies, and we'll take a look at what LRSI has been doing. And the way that you get a feel for this is not, gee, Pete has a definitive solution for all this. I wish he'd just tell me. No, go in and experiment with it, for crying out loud. Try a 30-minute basis. Try a 15-minute basis. Try an HA reversal. Try a 3-8 crossover. See what it does. Refine it. See how much of a pullback you think might happen. So if you look at LRSI, you can see right now on Netflix, it's above 80. So it'll have to come down below 20 and then rally above 20 for this to trigger. Well, on a daily basis, you can see how long it takes for those triggers. By the way, nice horizontal breakout. Okay, I can chase this if I am a short-term trader, but I know when I start to see a compression like this, ding, 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 the move is getting exhausted. Take your profits. You get a drop. Okay, I could see that. So now you get your drop. And that's what I'm waiting for. If I'm a longer term trader, I'm waiting for this drop. There's your LRSI, less than 20. Would that have been a good entry point? Yeah. There's another dip. Would that have been a good entry point? Yeah. Well, heck, why don't I just do this for the market? And now I'll have that working for me as well. Yes, so we want to buy these dips. Well, we can take a look at how did that last dip play out with LRSI. Oh, look at that. Pulls back here. There's our entry point. Yeah, I would say that's a pretty good entry point. LRSI is a very effective tool. So this is what you needed, that magnitude of a drop to get you in on the SPY, and that's on a D1 basis, okay? I'd mentioned to you I'm setting this on a M30 basis because I don't think that I'm going to get as big a move, but if I want to, I can create alert. I can go into LRSI or 3-8 cross, HA reversal, any of those I can use. And I'll go into a D1 and I'll put the same type of alert. And so now, if I get a little bit bigger pullback, I'm still going to get that LRSI alert that's going to remind me, hey, this was part of your game plan. You were looking for a dip. You got the dip. The market's found support. This is a time when you want to be out there buying. And so Netflix, you evaluate the market dip, you evaluate the dip in the stock. AXP, same thing, brief and shallow, holding that gap up, beautiful. If you want to play it safe initially while the stock is still kind of finding support, the market's still kind of finding support, selling out of the money bullish put spread. That'll at least get some points on the board. And then when the stock and the market start to get their footing, Now you're looking at getting more aggressive, perhaps buying some call debit spreads or some longer term, deep in the money calls with lots of time, 3 months till expiration with a high delta, zero point 0.7 or higher. Yes, they're going to be expensive options, but you're really looking at a longer term position. And because you're buying options, you're leveraged. This is a $500 stock, okay? They're going to be expensive. So I like Netflix. I like AXP. There are lots of stocks. Amazon has looked great. They're getting ready to announce earnings. So, in fact, let's take a look there on the 1st. So, yes, this week they're going to be announcing. I think I'm getting a little bit long-winded here. So, I'm just going to flip. I'm going to see what else we've got out there. If earnings haven't been announced, though, I would be very cautious. I still like the banks. I think the banks are going to do well. So, especially if you get a higher for longer message from the Fed, here's why I still like banks. They've announced earnings. The earnings were good. The guidance was good. The economy is good. GDP, job growth should be good. Bad debt write-downs, not a problem right now. And the Fed says, hey, higher for longer. What does that signal? That signals that they believe that the economy is still on decent footing. They don't see the need to cut rates. What does it mean to banks? Hey, I get to charge my customers higher interest rates. That's good for my profit margins. So I still like bank stocks. So if we get that little market pullback, make sure that you're keeping an eye on JPM. And that is going to be a nice trade when it breaks out. And watch that market come in. And if it stays tight to that all-time high, the market comes in and it starts to find support, this stock, boom, is going to break out. So I still like that. I was going to go through some bearish searches. I was going to show you the type of stocks that I would day trade. I'm just going to go in very quickly because I did see a couple of stocks that I think might set up well. So let me go through and take a look and see where I can find. There were a couple of them. And now, trying to see. MMM, I think, is going to be a decent short. Now you can see that stock fell sharply here, broke below the 100-day moving average, below the 200-day moving average, below AVWAP E. So yes, any kind of rally in this stock, I think, is going to be met with resistance, but and I can't remember which stock I found on which search, so I'm just kind of looking for it. I'm going to have to remove these filters. But crypto, I think, actually looks pretty short in here right now. All right, ENTH, I think that's the symbol. I can't recall the symbol. It's one of the crypto stocks. Anyway, let's conclude the video. You should not be focused on the short side right now. You should only be focused on the long side. ENPH. That's the symbol. Okay, so why do I like that? So resistance, first of all, below the 200-day moving average, stock drifting lower when the market is higher, breaks below the 100-day moving average. Now it's tried to get above the 100-day moving average. With the market moving higher, all of these support levels right here. So I'm not going to review this in the next video, okay? I am not reviewing this stock because you should not be getting cute. You should not be shorting. So I do not want any follow-up questions on, oh, I'm getting my head handed to me on ENPH. What do I do now? If you're a day trader, in and out, keep it short. You break below this upward sloping trend line, you break below AVWAP E, you've got a nice opportunity if the market has some selling in here, crack down, yes, this is the kind of stock that I'd want to short because you're already seeing those signs of resistance and the inability for the stock to put any kind of decent bounce together here when the market is moving higher. So you get a red candle cracking down through these support levels here Wednesday, Thursday, Friday on heavy volume. Yeah, that's going to be a decent short. And you can already see the selling pressure coming in. So thanks so much for watching, everyone. I know I went long on this. I had a lot of information for you, a lot of it market related, a lot of it psychology related, because so many of you are going to try and get cute with shorts in here, and it's just not what you should be doing. You should be taking gains on your longs, stay in sync with the market. Market pulls back, we evaluate the depth and duration. We evaluate the dip, specifically the depth and duration. If it's brief and shallow, we know we're still in go-go mode. We're waiting for market support. We reload our longs. That is exactly the mindset that you should be in. Not, I'm going to make money on every wiggle and jiggle. Again, thanks so much for watching. Make sure to check out the tab that's got the live events on the YouTube channel. You'll see that we've got our events scheduled for next Wednesday. I will see you then. Thanks so much for watching. Have a good weekend.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.